Hello, everybody. How's it going? It's been a few weeks. It's been a disaster. Actually, the last few days, I got back half the disaster. The last 6 days, I lost 30% last week, 30%, and I've made back half of it in the last 2 days, today and yesterday. I think that's right. Obviously, most of that's Lionsgate, which we will get to. I'm excited to talk about a new idea. I decided that this is the first time I've ever put out an idea that I didn't tweet first. So everyone that's on YouTube right now is hearing it at the same time as people that follow me on Twitter. There should be a few caveats here. First of all, it's a biotech, and I know virtually nothing about science. I know virtually nothing about the underlying diseases that this company seeks to treat. And it's a small company. It trades, I don't know, so far today, it's traded $1 million. So I'm not like pitching some nano cap, but it's completely dead for sale. And it's at 52-week lows, and there's absolutely no rush into this stock. Okay. This is not like I'm not trying to pump this stock up. I'm not going to be selling any if it goes up 10 or 20% or something from here. So I can't overestimate that enough. So let's just take it easy with the stock. There's not going to be any kind of secret, surprise that I'm revealing here that requires you to buy this like immediately or anything like that. And of course, none of this is investment advice, and you truly shouldn't listen to anything that I say, especially when it comes to a biotech. But the stock is Ocular Therapeutics, which is OCUL, and there are multiple reasons why I think that this is going to go up a lot, I guess, over the next 3 months, maybe next 5 months. I have like multiple shots on goal here, I think. And it's pretty rare for me to buy a biotech that doesn't have an event coming up. Usually I don't buy for data readouts anymore. So the only thing I really would buy for is a major amendment. As you know, I'm big into major amendments and things like that. But to get involved in a biotech in a kind of a buy and hold manner is pretty rare for me. I made this like a 6, 7, 8% position. It's not marginable, so I can't make it bigger than that. It's like a $225 million market cap with 125 million in cash. So there's about 100 million enterprise value here. What's the story with Ocular? Okay, so there's basically 3 parts to the story. Okay, there's a commercial business with an approved drug called Dextenza. Okay, we're going to focus on that first. The second part is a very exciting drug in the pipeline that is, they released phase 1 data in September, and they're going to release updated phase 1 data in February. And the stock actually went down on the phase 1 data in September, despite pretty much universal praise for the data. And the reason why I think it did that was due to funding concerns at the company. Everybody assumed, and I think they still assume, that they're going to either do some sort of very nasty capital raise. And that's kind of the focus of this whole pitch here. And then the third part of the story is they have other pipeline assets. They have a phase 2 readout in the 3rd quarter of next year, and they had 2 other drugs. Excuse me, well, they're drugs, but they're not approved. 2 other pipeline assets that people aren't very enthused about, that they are going to do some sort of reformulation trial to see whether or not those drugs can go into phase 3. But altogether, you have the potential for 5 phase 3 trials across 5 different assets. Okay, the phase 1 trial that they're reporting results on in February can be into 2 different indications. So it'd be 2 different phase 3 trials. I'm going to get to that later, okay? Let's just focus on Dextenza, and let's focus on why I got interested in Ocular. So I owned some of this a couple of years ago, and it's been a disaster. I was basically just piggybacking some smart people I know on Twitter. And the stock was $20, and now it's $3. And most of the reason for its decline from $20 to $3 is that the commercial business, this Dextenza, has been wildly disappointing in its ramp. So there's 2 things you're going to need to do to kind of research this idea. You want to go to their website, and the CEO has done 2 roundtable discussions. One was November 30th, and one was November 14th. I'm going to talk about those in detail. But if you pull up just their investor slide, it's in their investor presentation section. You'll see that on page 9 of the presentation, they give you the quarterly sales for Dextenza. And starting in quarter 3 of 2021, they've petered out. There's no growth anymore. So it was basically ramping really nicely to about $12 million, $11 million a quarter. And for now, 1, 2, 3, 4, 5, 6 quarters in a row, they've had between 11 and kind of 12.5 million in sales. It's no longer growing. This was supposed to grow kind of at a 50% a year pace, something like that, right? Ramping. And it stopped growing. So they brought down guidance last quarter for the fourth quarter, and stock blew up. Stock was blowing up anyway, but the stock blew up on the commercial business. Basically, it appears at face value has petered out and has no value. Okay. Now, what's interesting, there's 2 parts to this Dextenza situation that I find really interesting. The first thing you need to do is you need to listen to, when you get done with this YouTube, if you're interested in this idea, is you need to listen to the fireside chat from November 30th, the last one he just did, the CEO, okay? And then if you're still interested, you should listen to the one from November 14th or 15th, okay? In the November 30th presentation, I'm getting ahead of myself here. Let me just back up real quick. So when they reported earnings in the first week of November, when they brought down the guidance, which they couldn't have hit the full year guidance that they had previously, they gave us the October sales for Dextenza. And they said that it was a record month, and they did over 1,000 more billable sales than any other month previously. Okay. He also said that the previous 2 records and the way the usual sales cycle works is that the last month of the quarter is the strongest month of the quarter. And this happened in October versus happening in December. If you simply just assume that November and December are the same as October, but I actually think December will be higher than October, and November might have been higher than October, you get to a revenue number of something between 15 and 17 million for Dextenza in the fourth quarter versus the street at 12.5 million or so. The street at 12.5 million is about, it's in line with what their guidance was, and it's about, again, flat with the previous 5 quarters. Okay. If they somehow go from 11 to 12 million every quarter for 5 straight quarters and put up a 15 or 16 million quarter, I think that alone can make the stock go up 50%. Okay. And if you listen to the conference call, if you listen to the November 30th fireside chat, you will see there are multiple reasons why Dextenza is now selling well versus why it wasn't selling well for the previous 5 quarters. They are like a myriad of factors, but COVID, the Dextenza is used for elective procedures, and due to COVID, elective procedures were down, and staffing at those hospitals or those procedure centers were down. And Ocular's sales force was not fully ramped. Okay. All these things have been alleviated. Okay. Ocular has a full sales force now. And obviously, COVID isn't an issue anymore when it comes to elective procedures. And you have there was changes made with reimbursement and with it's very, very complicated stuff with how, which I don't even understand, which with how they get paid, with how doctors get paid for using Dextenza. There was a one-time hit to sales months ago because instead of doctors getting $250 to put Dextenza in, they only got $35. But all that's washed through. He explains it really well in the November 30th fireside chat. Okay, the most interesting thing, there's multiple different things going on here, but there's another drug that is on the market that is basically being pulled from the market on Jan 1 because of reimbursement issues, and that if they capture all the sales in that drug that used to go to that drug now goes to them, that alone can increase billable sales by up to 50% from where we are today. Okay, so what used to be headwinds are now tailwinds for this drug. But really, it just comes down to the fact that he gave us the October sales. In the November 30th fireside chat, he reiterated the strong quarter they're having. And December should be better than October. Okay, this is not enough of a reason for me to buy the stock. I did not buy the stock for this reason. Okay, but I want to make it clear that I'm not counting on any kind of strategic process or sale or anything like that for this to work. I think it can work just on them putting up anything really north of 13.5 million in sales. And you could do your own math on what the sales will be based on the October numbers. I did it. So basically, I think they did like 26,000 units in quarter three, 26,000 units. I have to pull up my notes here. And if you just assume, like I said, that November and December, the same as October, you get to something like 30% more billable units sold in Q4 than Q3. And thus 30% higher revenue for the company. And you could do it on your own. Again, not why I bought it, but super interesting. Okay. Why did I buy it? I bought it because on both, and I'll get the sentiment in a second, which is so great. The stock is so goddamn hated. Okay. I mean, 5 straight quarters of crappy revenue and years of pain and suffering and tax loss selling. It has all the ingredients here. Okay. I digress for a real quick second. There are 2 major shareholders here. One of them is the Sackler family that owns as much as 20% of the company if you convert their convertible, which is only a few dollars out of the money. Okay. They have been buying this stock nonstop for years. You can see the insider trading on it. Okay. Interestingly, they bought a token amount of stock the first week of November, and they haven't bought a share since then. And it's much lower than it was the first week of November. Okay. The other major shareholder is AMPY, I think, or what is the name of the hedge fund? Hold on, I'll tell you. The other major shareholder is, AMPY Management. How ironic, it has the word I in it. I'm going to guess maybe they're an eye specialist, a hedge fund that focuses on biotech eye stuff. They own about 8.5% of the company. So I really like that you have these two funds controlling 25 to 30% of the company or so. And AMPY was a buyer in Q3 for the first time in a year. Okay. So neither of them are sellers. Okay. No, but they are terrible. That's hilarious. Anyway, if you listen to the conference call, the fireside, I'm sorry, I keep saying that, on September 30th, on November 30th. Why do I keep fucking saying September 30th? On November 30th. It started with the fireside chat on November 15th, but the CEO for the first time ever talked about how they need to get into a situation where they count on no dilutive capital raises indefinitely. And they are planning for a world with no capital raises. Okay. He said it in November 15th, and then I think November 14th, whatever it is, and again November 30th. And in both of those fireside chats, he specifically mentioned that Dextenza, if you base it on comp sales, is worth between 5 and 15 times revenue. He makes a mistake and says earnings on both of them. He said he changed it to revenue on the one November 30th, but he knows what he's talking about. And then he gives you a range of 250 to 750 million in value. Okay. He also says that they have these phase 3 assets and they could partner with somebody on the phase 3 assets for non-dilutive funding. But he makes it very, very clear that they are not doing a secondary offering anywhere around here, and pretty much indefinitely. And they're planning for never being able to do a secondary again. Now, they have cash for another year or so, maybe 5 quarters. The trials that they want to put on, especially this one where the readout's in February, cost $400 million. And they want to launch this trial in the second half, more like the end of the third quarter of next year. They don't have $400 million, okay? The other indication that drug could potentially be used in, they want to launch that in Q1 2024, and I think that's like a $125 million trial, okay? They don't have this money. It's my belief that he is not going out to the street in multiple presentations talking about partnering or selling Dextenza or partnering or licensing out the phase 3 assets unless they are well on their way to doing this. And I think the natural path here, they don't have to wait until they report Q4 to show a potential buyer what the ramp is happening in Dextenza now. They already have 2 months of sales, October and November. But conservatively, I assume that no partnership or sale of Dextenza happens until February or March of next year. What could this look like? Okay. Well, it doesn't take a rocket scientist to see that if they sold the asset completely for $250 million and they then get a royalty from that, they'll be sitting on $350 million of cash and a phase 3 asset. They have potentially up to 5 trials in 3 different assets, but just the one everyone's really excited about, this TKI, they'd be fully funded potentially with $350 million. Right now, it's a $225 million market cap, and you have an asset that people think is worth, it could be a multi-billion-dollar drug if it's approved. And everybody believes that the phase 1 trial was a success, and that there is a very good chance that they've already shown that validity to move it to a phase 2, phase 3 trial. And they're very clear that the next trial for this will be a pivotal trial. It'll be something like a phase 2, phase 3 blended trial. Okay. Where do you think the stock trades in that scenario? Right? 350 million of cash, a double-digit royalty, and a pipeline that people are excited about. My guess is it would be a $750 million market cap, which would be a triple from here. And that's using the low end of his comps. I've been doing this a long time, and he does not gain anything from pumping his stock if he's not going to do a secondary offering. And you don't do a secondary offering when you're going to the street in 2 consecutive conferences and saying they're planning a future with no dilutive funding. So all he does is set himself up for failure for not getting non-dilutive funding, or failure in the price he gets for selling or partnering Dextenza. It is not in his interest to do that. Pumping to do a secondary makes sense all the time in the world in biotech. You pump the data, you pump the future data, you pump the potential, and then you do a secondary. Okay? That's just not the case here. There will be no secondary. So he is adamant that they have, and he also specifically says we're not talking about debt financing. He says that. Non-dilutive, non-debt financing. And he mentions the ways he could do it. He mentions selling Dextenza or partnering Dextenza. And he mentions partnering or selling the phase 3 assets. So that's the second reason why I like the idea. And the third reason why I like the idea is you have this data coming in February that, based on what the data was in September, I think there's a really good probability of this data being positive. And it's a big difference with the stock at $2.88 versus the stock at $6, right? Most people were pretty shocked that the stock went down on the last data readout. And I believe it just went down because people thought they were going to have to do a huge freaking raise, because you need $400 million to bring this drug to trial. And we're now sitting here at the in December. There is no raise. They've said there won't be a raise. And you have them openly talking about selling or partnering the commercial drug. Okay. And the final catalyst is a phase 2 readout for another drug in the second half of next year. Who knows what happens with that? There's also a potential rule change with how Dextenza would be reimbursed that would come in November of next year, that they talk about in the last fireside. That would be a game changer if they get that rule change. And he thinks there's a pretty good chance they'll get it. So I think it's pretty interesting that insider buying from Summer Road, they've halted. There's no trading happening in this stock. And the stock's 280. So the CEO bought stock a few years ago. Summer Road buys stock all the time. And now all of a sudden it's nothing. So it's my hypothesis that Summer Road is maybe behind a wall and is advising them on what to do from a capital raising standpoint. That's a complete, hypothesis on my part. I don't know them. I never spoken to them. It's just judging by the fact that if you like it at 5, you love it at 280, and nothing's really happened except for the poor Q3 sales in Dextenza, which just is the same as Q2 and Q1 of this year. So nothing fundamentally has changed in Dextenza that would make you less interested in this company if you were interested in it before in the past. I cannot believe the stock market's about to go red. I just can't believe it. I should understand it at this point, but I just can't believe it. So that's my pitch for Ocular Therapeutics. Sentiment could not be worse. It used to be a big retail darling. You can go do a Twitter search on it, and you can see, people are mostly just shitting on it. People don't really talk about it anymore. It's very rare to find a shit biotech that openly will tell you that they're not planning on capital raises, and they won't do a capital raise. Openly will tell you that they are looking to sell their business or partner their business, and do it on consecutive calls. So don't take my word for it. Listen to the last two firesides. He says it on the last one. He goes into deep detail about it on 2025, minute 20, 25 seconds through the end of the call. And on the one in November 14th or November 15th, it starts at 23:50. But you should listen to the whole thing. And Yeah, I mean, to me, that's like a three-prong thank you. You know, the way I stress tested this for, why I like it so much is I think I would be buying this at $5 or $6 right now, truly, because I think what the math I outlined for you, which is that if they brought in 250 million in cash, which is again is his low side. Again, why would he give you a range of 250 to 750 if he thinks he's only going to bring in 250? It just makes him look bad. He doesn't have to do that. He's not pitching this to, investors to buy Dextenza or partner Dextenza. But they bring in 250. They have 350 million of cash. It will not trade at cash. People do like this drug in the pipeline. They just don't know how to value it right now, given how much cash needs they have. And I think you get to like a 750 to million to $1 billion market cap kind of thing. At 750, you get to more than a triple. So if it was $5, it would be a double to 10 kind of thing. And that's not even assuming that they get decent data in February, and then they can maybe possibly partner that drug. And they partner that drug, it's a complete game changer, right? They then have somebody else fund the development of it, or they do a 50-50 development deal. And this is a multi-billion-dollar opportunity, the February data readout and that indication. So anyway, take it easy with the stock. I already see it's up like 10 cents since I started talking. I am pretty enthused by it. I'm pretty excited by it. But I mean, I don't know anything about biotech, okay? So you should definitely stress test everything I'm saying with other people. The big risks here, like something changing with reimbursement in Dextenza, I think are very low in the next 12 months. I think they're very low indefinitely. I think the bad stuff's already happened. And I think you'd only have good things from a tailwind perspective. But that would be something that, you would probably want to figure out on your own. I don't know why the CEO would be talking about selling it for 250 to 750 if they were looming issues with, there's definitely nothing from a competitive standpoint coming out with it. So I just don't think people believe that they could ever start growing the business because they didn't do it for the last 5 quarters. And I think they show one big kind of hockey stick quarter, and that's it. They convince people that, they can do it. All right, let's talk about Lionsgate. I'll take any questions if we haven't. Lionsgate, I don't even know the last time I spoke to you guys. There was a double downgrade by JP Morgan, basically saying that they have more debt than they thought they had, basically reclassifying production debt and some other liabilities as debt in the enterprise value. And as a result, they shaved $3 off their target price from $10 to $7. They then put some draconian multiples on the Stars business and on the studio business post-spin, and they have the company being kind of stuck at a $7 or $6 or $8 valuation. It was really garbage analysis for many reasons. Nothing was actually said about the fundamental business or about different disagreements in what numbers are going to be in the coming years. It's almost like they just woke up one day and decided to change their paradigm for valuing the company. And as I've seen many times in many different companies, if you want to, make up numbers to make a company a sell, you can do it. I mean, I talked about it with IAC, I think, last time, but somebody came out and initiated with a sell on that. And, it was all sorts of magical tricks, 10% holdco discount, 25%, here, 25% there. They value the Turo investment at cost. They value care.com at half the valuation of what they paid for it. They value Dotdash Meredith at its debt with no equity valuation at all in it. They value Angie and MGM at the current price with no potential for appreciation. There's tons of ways to make a stock not interesting. And that's all that JP Morgan did. Interestingly, they still got to a $7 valuation, even with these draconian assumptions from either from a debt perspective and also from a multiple perspective on the studio and on stars. So no, nothing about it changed my mind there. I obviously think that it's very unlikely we get any kind of strategic transaction anytime soon, given the insider buys that happened. I'm very disappointed with how that's transpired. It's been, I consider it a failure, obviously. The stock's down 40% from when I bought it. I was very, very confident they would do something, and they did nothing. The difference here and with Ocular is that Ocular will run out of cash in 5 quarters, maybe 6 quarters. Lionsgate will not run out of cash. Lionsgate is profitable, cash flow positive, and they didn't have to do a strategic deal. My understanding is that they're just unrealistic and greedy, and they will wait until they get closer to a spin or when a spin happens and get a higher premium valuation for those stakes. Ocular has to do something. And there are enough buyers for a commercial revenue stream or a commercial business that they should have a competitive process and they should be able to raise that money. That's the difference. It's not just me taking the word of a management team saying, you know, we're going to get something done. But Ocular might fuck up, but if they fuck up, they're going to have to do a terrible dilutive raise. And I just don't see that path given the language of the company. Ocular also could have raised money in 2022, and they did not. The stock was $6, $5, $7, whatever. If you pull up a chart, you can see it was, they also had an ATM outstanding. It was, you know, it was basically $5 for a good 2.5 months. They probably didn't raise money because they thought the data they released in September was going to double the stock, and then they would have done an offering at $10. And it didn't double the stock. It took the stock down from 5 to 3. So now they have to rewrite the playbook. And rewriting the playbook is figuring out how to get some money into the door without doing a terrible capital raise. By the way, you can't even get a capital raise done that matters. What are they going to do? They're going to do a $100 million offering at $2, you know, and, you know, double the share count and raise $100 million. That doesn't get them really far enough along with these phase 3 trials and the funding needs they have. They need more money than that. So, yeah, anyway, that's the difference between Ocular and Lionsgate. You know what's amazing is I'm literally still buying Ocular Therapeutics for myself and my other accounts and the family account. And I'm not entirely sure why I pitched these ideas before I'm done buying them, but I swear to God, I'm buying it as a percentage of volume right now. It's costing me more money buying a stock that I'm basically done. It's non-marginable. So some of the reasons why I pitch these stocks on here is that if they go up, then I'm less likely to make them bigger, and it keeps me sane, and as opposed to risking too much money on a non-marginable biotech. So I'm doing it for selfish reasons. The higher it goes, the less likely I am to take more risk. And so it's not that I'm going to sell it into a move. It's just that I won't buy it into the move. AYX. You know, AYX is so interesting to me because if you look at COUP, C-O-U-P just sold, they're both just software companies, and they don't have the same end markets or, you know, do the same thing by any means. But the financials are somewhat similar in these two companies. They're both going to do $1 billion of sales next year. AYX has better gross margins, but COUP has better free cash flow, though they both don't really have much in the way of free cash flow. And COUP just sold for 8 times sales. And to prove to you that they're pretty similar, COUP was trading at the similar valuation as AYX before it got taken out. So it got taken out at an 85% premium. So they were trading around the same EV to sales, which means the market looked at them as somewhat similar profiles. And AYX has a hugely incentivized management team and board. And I talked about it in the past, but they put in this gigantic change of control in February, and also this huge stock-based comp for the management team that they don't get paid until the stock's 90. And the way I understand this company from reading Vic is that they have like decades of tailwind behind them. You know, they serve it's a really good product. They serve a real need, and there should be no reason why they can't continue to grow at 20 to 30% annually, you know, going forward. So I really like AYX without really knowing what the hell they do. I thought that the fact that you have a guy that controls it, there's super voting stock. So you have a guy that controls it, yet they put in a change of control is very interesting to me because he's in charge of whether they sell the company or not. It was also a $50 million insider purchase at the beginning of this year at higher prices. It was a fund that's on the board, but they bought $50 million worth of stock. I also think it's interesting there's been no insider trades in AYX in the last 3 to 4 months. The stock's been beaten up and no buys. And to me, that possibly signals you could be in a process if there's no transactions at these levels. And the window is definitely open and nothing. So anyway, we'll see what happens with AYX. I like January 24 call spreads. I own 70, 85 call spreads there. I own some common, but I own 70, 85 Jan 24 call spreads. QURE, QURE, got approved. That's it. I still own it. I'm disappointed with it selling off post-approval. It's higher than it was post-approval, but it was $27 at one point. They have game-changing data in Huntington's next year, which is not likely to work. But if it does work, the stock will go up like 3x. So I have no view there. I'll own it small into that data and pray that it works. AMPY, I don't know if I talked about that. I've recently made that pretty big again. I got a lot of call spreads there. A call spread I like in AMPY is Jan 24, 10, 12, 50, which you could buy for 45, 46 cents. The AMPY thesis is very, very simple. Okay. They are going to bring beta back online in the first quarter. Once beta is back online, the cash flow in this thing is going to just surge. And it's 50% gas, 50% oil, the company, and natural gas is basically at year highs, even with oil off. And the company is worth well more than $12.50 in the hands of an acquirer. And once beta gets back online, I believe the company will finally go through a strategic process because that's what all the shareholders want. And the board knows this. And they couldn't do it while beta was offline. And I think even if you just sell one asset by January of 24, the stock would revalue significantly. You pay down all the debt. There's really not much debt left anyway, Jan 24, because they're going to cash flow so much next year. But you'll basically have a wholly different kind of profile. And the best way to look at AMPY is pull up the investor presentation. And you can see how much cash flow they're going to generate over the next 18 months. And what that does to the debt level and what the current market cap is. And it doesn't take a rocket scientist to see that if the debt pay down accrues to equity, you get a 50% move already in the next 12 to 18 months, just in the debt pay down alone. Okay. So that's not marginable. So for me, you know, that's why I've been putting the spreads on there. CANO, I lost more money on CANO again. I sold it all. I'm out of CANO. I can't believe I keep losing money on that stock. Really got that one wrong. I can't believe a company could be in such poor financial health to almost go bankrupt or maybe go bankrupt after a failed process. It reminds me a little bit of ARDX that went from, you know, selling itself for multi-billion to bankrupt within a 12-month period or 18-month period. You know, this is odder to me because there's no fraud here. Though people think the business model is kind of fraudulent in this industry, but it's a remarkable failure, and there's nothing really else to say other than that. It's terrible. I think that's about it. Magnet chip, nothing new to say there. I still own my position. There's been a lot of tax loss selling. I still think 2023 is going to be great there. Obviously, the likely outcome there is a sale. Whether that happens in the second half of 2023 or not till 2024, who knows? If they sell themselves in 2024 for $20 a share, that's a double from $9.50. And with $10 in tangible book value and $4.50 of cash. And the fact that I can't overemphasize this enough, actually, with magnet chip, it's very interesting. The Korean won has moved significantly. So you have a 10% difference in share price just on the Korean won move in the last month. But if they take out another 4 or 5 million shares, which I have every reason to believe they're doing right now, buying back the last 50 million of stock, $20, a $20 sale price in 2024 really is only like a $17 or $18 sale price based on where the Korean won is and the share count reduction. And I'm not even counting any kind of cash flow they might get over the next 4 or 5 quarters. So, you know, it's easy buying stocks when everything is going well. The way you make real money is buying stocks when everything's complete shit. And it's kind of hard to imagine magnet chip being any more shitty than it is right now. You know, there's a reason why Korea didn't want this asset to fall in the hands of the Chinese, and the US government didn't want it. It's because they do have a moat. There is a real business there. There is patents and IP behind it. And, you know, I'm very confident that the OLED business will eventually generate sales at both Samsung and in their Chinese customer. And the stock will be materially higher. And your margin of safety with $4.50 in cash and $10 tangible book value has never been higher. Yet it's $9.50. You know, so if magnet chip was fully marginable, and I knew it would remain fully marginable, I would be at my biggest size I've ever been at with it. You know, number of shares. You know, not necessarily percentage wise, but it's not. So, you know, it's about a 25 or 30% position, delta adjusted. It's almost all common. I don't like options here, but I do own some Jan 24 calls in it. But I bought them before it went down. NCR is my third biggest position behind Lionsgate and magnet chip. And I think the path for NCR is just super solid. You had a gigantic insider buy with Engaged, and you have a new board member who's an investment banker. You know the company's for sale. The company's always been for sale. If you have FX turning to where next year international sales will be a tailwind, not a headwind. And, you know, the real picture there is going to be the macro environment. If the macro environment is stable, which is a big if, you should get a full company sale on NCR next year at high 30s, $40, 40 or low 40s a share versus $24 today. So, you know, that remains my third biggest position, split between common and call spreads. The call spreads I like in NCR are October of next year and Jan of next year. I'm split between 28.33 and 30.35. You know, I don't like to go above 35 because I could see a sale at $36, $37, $38. I don't think that's likely, but I definitely think it could happen. So I wouldn't want to go higher than that on those call spreads. Still on AIC, that's smaller than it was probably the last time we spoke, mostly because it's so economically sensitive and there's lack of catalysts. But I remain to like that. They put up some terrible numbers with Dotdash in November, and it's obviously going to be a long time before they get that business turned around. And yeah, thank you, Glenn. I owned HZNP. I didn't do a YouTube on it, unfortunately. I almost did it on Friday, but I had HZNP. Everyone that follows me knows, and that was a 20% position, and that got sold on Monday, so that helped me. And sorry I didn't do a YouTube on that, but I think that's about it. I don't think there's anything else that I want to talk about. I'd love if anybody has any pushback next time I'm on here on Ocular, I'd love to hear it. I don't think you're going to find too much pushback on the TKI data readout or the trial that comes out on Tuesday. I mean, on Tuesday in February. And, you know, I'd love to hear pushback on Dextenza about why they won't be able to partner or sell that business and where I'm wrong about the sales. Oh, ARDX. Thank you, Yuri. ARDX has a huge event coming up this week. Nothing's changed from when I talked about this last time. I don't own any comment on this. I just don't call spreads. I'm very nervous into the ARDX event. There's basically two things that could happen. The FDA can say, we're going to approve this, and we're going to go on 2-month labeling discussions with you. Or the FDA can say, we're not approving this, but you could refile with some more data, and we'll give you a 6-month review. Someone asked me today, which is a really good question. Unfortunately, I don't know the answer, where the stock goes with each of those outcomes. My guess is if the FDA gives them a 2-month review, the stock goes to at least $250 and maybe as much as $3. If the FDA gives them a 6-month review, which is effectively rejecting it, but giving them a path in theory to approve it without a new trial, mind you, the stock goes to $1.50 to $1.70. And in the worst case scenario, which is, I think, rather unlikely, the FDA says you still have to run a new trial, or the stock goes to $1.75 to $1 or lower. That is, I think, less than 5% chance. And the company thinks that's like a 0% chance, especially with the AdCom that the vote was. I don't know how to handicap the fact that the chairman bought $1 million of stock. And the chairman would buy $1 million of stock if he felt that there was going to be a 6-month review. So I'm nervous there. I'm keeping the call spreads on. I have pretty big exposure with it. I think with the call spreads I have on, I have 300 basis points of exposure, dollar amounts in 23 call spreads, and then 24 call spreads. I have like 400 more basis points. So I have like 700 basis points total in exposure, which is a lot. The good news about the Jan 24 call spreads is those will capture the 6-month review, of course. So those won't go down as much in a bad outcome. In the 23, most of those are $1.50, $1.50 strikes. Almost all of them, really. So the $1.50s would get wiped out. The dollar strikes would lose, I don't know, half of their value, a third of their value, and the 50-cent strikes would lose, half of their value. So I can lose 200 basis points there, 150 basis points there on a bad outcome, and then maybe lose 100 basis points on the 24s. So I don't have any kind of conviction at all in what happens with ARDX, but that will happen this week. So stay tuned with that. And yeah, I think that's everything, guys. I cannot believe the market's flat. What a shit show. All right. Well, I hope the next time I'm on here, I have some more good news. Maybe we'll have a partnership with Ocular, though I don't think that's going to happen like this week, right? I mean, if the guy's on his fireside chats talking about this in the middle of the day, in the middle of November and then the end of November, I think they're definitely in a process. I don't think he's thinking about doing a process. They're planning right now. He says they're planning for non-dilutive fundraising and funding. And, that requires them to actively market the product to partners. So it could come at any time. And yeah. All right. Thanks, Gary. I appreciate it. All right, everybody. Take care. Have a great day. Let's hope Powell doesn't fuck us tomorrow, though. Does it really even matter with the market not even up anymore? Anyway, take care, everybody.